Okay, so welcome to today's webinar, and as you know, we're meant today to talk about reversals, and it's sort of a companion webinar to the last one where we talked about trend trading. So here's how it works. The best thing I can do is actually show you a trade from yesterday that I took, and it was kind of a tricky one. And the reason why it was so tricky is because of this was yesterday, and what happened on the Kiwi is you can see the Kiwi came to a level that was pretty good as support here, support, a little bit of support, broke through, came back up, couldn't get through, came down, woo, broke through, touched it, broke through, touched it on the way up, and then down here it got in this area and it broke through. So the question is, how did I know? Well, what is it about when the market gets to a level? Yeah, I can do that, James. There you go. When it gets to a level, what is the market going to do? And so what we're going to talk about today is the reversals. What does a reversal look like? Well, there are characteristics of reversals, and this was a breakout, of course. This was not a reversal down here. When the market came down here, it actually pushed through and broke through, and now it's come back up, and this candle is going to close, I believe, in 2 hours on my chart. So if this candle closes something like what it looks like now, which it probably won't because it's, it's only halfway through the 4-hour candle. It'll probably look totally different. But if it closed, let's just say it closed like that, that to me would be a pretty good reversal. But I want to talk about this and why it is that there are characteristics of reversals, and what are those characteristics and how can we use them in our trading. So does anyone have a chart you want to look at? What is something that you right now are trading or thinking about trading, or you like to trade a pair? It doesn't have to be a pair. It could be another market or something. What is something that, because I don't want this to be like me cherry picking examples. I want to just look at something real. Okay. CAD Swiss 4 hour says, we'll do the CAD Swiss 4 hour, James. And then we'll do the Euro Kiwi. Okay, how about those two? So please remind me, CAD Swiss and Euro Kiwi. They're two very different pairs. So CAD Swiss, and you said 4 hour, James. Okay. CAD Swiss 4 hour. This is obviously the daily. Let me go to my 4 hour charts. That'll be better. Cool, and double cool. Here it is. Right, so I've got the 2E system on my CAD Swiss charts. Of course I do. All right, let me change the template. Sorry about that. Okay. So how do I draw in the zones? This is just a quick reminder. If you're new to naked trading and you haven't been to a lot of these webinars, this is kind of what I do. I'll go to the higher time frame. I'll drop in all of these. If you're new to this, this is how it works. And really, people ask, what is your level? Is this a level? I'm not a big fan of saying Walter's got a level on the CAD Swiss 4 hour chart at 92.78. Everyone else should do that too. I'm a much bigger fan of Walter says this is how you draw support and resistance lines. Why don't you try that? You know what I mean? In other words, teach a person to fish. Don't give them a McFish sandwich or whatever. You know what I mean? That kind of thing. So I think it's better. You're much better off to learn this skill, which admittedly after a time is really easy. But in the beginning, it's kind of daunting, isn't it? I mean, for those of you that are new to this, it might be kind of tricky. Where is there a zone? Well, it looks like there's a zone around here because I have a touch here and a touch there. But for some people, it's a little bit tricky in the beginning, and that's completely understandable. But I think you're much better off learning on your own rather than just following along with somebody. Now, you might need to follow along in the beginning, but the idea is the goal should be that you get to the point where you can draw these in on your own. And see what I'm doing here is I'm drawing levels that were support and resistance and support, right? Um, yeah, James, email me. Email me, James. Jorge says, "Hooray for the 2E system." I know he loves it. Um, okay, Mike says, "Wow, you make it so easy." Yeah. So if I'm going with the 4 hour chart, I go to the daily, I draw on my dailies, then I go to my 4 hour, and then that's it. And now we're done. How far back do I go? It depends on. Oh, this is really cool example, James, because we're right on a zone right now. I didn't anticipate that, but you can see we are definitely right on a zone. This is where the market touched back here, and we're there once again. Now, I might need to clean it up a little bit and say, okay, well, this is kind of, if I get to a close to a round number, like this one is at 92.09, well, maybe that's 92 even. Maybe that's 92 even. That sort of thing. So that's the only time I really fudge them. There are two instances when I will move a support and resistance line. One is when the market is not behaving currently on that line. In other words, like let's say we had this line drawn right here at 93.30 and the market started doing this, hopping around it, and we say, oh my goodness, what's going on here? And it started doing all this. Then we say, oh, okay, are we sure that this is still a zone? Because yes, the market held here and the line chart even shows some of that, but it just seems to get kind of weird here. And if it does that, then I might change it. But then you can see what happened was after the market broke through, it came back up and touched it and fell, which is a very reasonable reaction. So in that case, I say, okay, no, it's fine. It's good. But I think I remember years ago, this is probably the last time something crazy happened on, I think it was the Aussie Yen Daily. And it just started doing something really, yeah, there it is. I just had it. Okay. I'll go back and show you what I'm talking about. So I think it was here. Yeah, I think it was 2010. On the Aussie Yen, I think it was there. It started, it was up here, and I had this resistance level at 86, right? And the market broke up, and then it started doing all this weird stuff on it, and it broke through, and it came back up, and I started getting worried, and I thought, well, is that really the right spot, or should it be a little bit higher? Because if you see the line chart, it's going to show all the touches are a little bit higher. So I moved it from 86 to 86.38, or something like that. And that's what, I did that back in 2010 because I remember thinking, and that's the kind of thing I'm talking about. Like, likewise, let's say I had a level, let's just say I had a level drawn in right here at 78.34, okay? And then look at what happened in this area. The market starts acting really weird, and you think, okay, is this still true? Is it still holding? Let's see. Well, it looks pretty good so far. Okay, yeah, it's still holding. Okay, now it broke through again. Yeah, it seems to be reasonable. I mean, the touches get a little bit lower down here, so maybe I make the argument that it's a little bit lower and that's the better zone, that sort of thing. But that's really the only time I move it. And then, well, there is one other instance when I'll move a level, and that's when it, talked about that before, when it's really close to a round number. Like if it's at 85.95, I might just move it to 86, that sort of thing. Okay, so enough of that sidebar. Let's go back to the CAD Swiss. So everyone saw how I drew this. Basically, I'm a 4-hour chart trader in this instance, so I go to my daily chart. I draw in my zones on my daily chart based on the line chart. Then I go back to my 4-hour chart, and then I'll drop my line chart in there again and make sure that all my zones are drawn. And once they are, did I miss any? Obviously, I am going to miss some back here because the market's not in that area right now. But obviously, I'd want to put one there. Probably also want to put one right around there. And then, that sort of thing. Now, as far as how far back do we go, really the key is, where is the market right now? If the market's at an all-time low, I might have to go back 6 years to find my zone. But if the market's in an area that it's been at recently, I probably don't have to go that far back. So hopefully the only reason to go back far in time is when you're at the extreme highs or lows. And when we get to the Euro Aussie, you'll see what I mean by that. And sometimes you don't have extreme lows or highs because you're at an all-time high or all-time low. In that case, there's other tricks that you can use, but obviously you can't use previous support and resistance. Why do we use support and resistance? Because we know the market has a memory And if we're trying to find reversals, which is what this webinar is all about, we need to make sure that we go to those places where the market's reversed before. It makes sense. Long-term traders or investors, they have their stop losses there and their profit targets and things like that. These are the places on the chart which are magnets to a degree. You can see that how, on this chart right here on the CAD Swiss, when the market decided to take off here with this big bullish candle, where was it going to go? We knew it was going to go to where all these candles were because that's where it went before. It was like a magnet. Now, if I go to the 1 hour chart, I'm going to show you something really interesting. I could see it on the 4 hour. What we have here is a possible squeeze where the market's following this trend line and it's hitting the resistance level up here. So it's boom, 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 and it keeps coming down. This is a classic breakout signal, right? It usually means the market's going to go up. And that's what we have to watch out for. And I'm going to talk about this when we look at this idea of finding reversals. Here's why. Because when we're finding reversals, we want to stick to some rules here. So let me write out these rules. The number one rule is, and this is the easiest way to know that you've hit a reversal, is a reversal has this characteristic. Very few candles touch the zone. Okay? Very few candles. Does this mean that every time only a few candles touch the zone that the market's going to reverse? No, it's not perfect. Of course. Only Christina Aguilera is perfect. I don't know why I just said that. I'm not even a Christina Aguilera fan. But I don't know. Does she sing a song? Who sings a song called Perfect? Yeah, now I need to know that. Because I want to use that joke again. Maybe not on you guys, but with someone else. Okay. Big kangaroo tail on the Euro Aussie. Okay, we will check out the Euro Aussie. We're going to go to the Euro Kiwi and we're going to go to the Euro Aussie after these two. Okay. After this one. All right. First thing is few touches on the zone. Okay. What do I mean by few touches? Here's a few touches right here. Boom. Right? Basically, this candle here was the only one that penetrated the zone. And it bent. Also, the second thing I want to see when I'm looking for a reversal is I want to see that bend. The bend is your friend. Some people may have heard that the trend is your friend. No, no, no. The bend is your friend. The bend is your friend if you're a reversal trader. Most traders here, most of you guys are reversal traders. Most of you prefer to take trades that are the market's hit a spot, it's going to turn around and keep going. Why is that the case? There's a couple of reasons. One is that a lot of us as traders, we're contrarians. We don't fit the norm. We're outlaws. We're gauchos, right? If you speak Spanish, you can just say we're gaucho traders. Outlaws don't look at the world the same. What a typical person does is says, well, what's everyone else doing? Oh, well, that must be the right thing. I'm going to do that. Most of you here are not like that. That's why I like hanging out with traders, because you think like me. And it's kind of fun. It's fun to hang out with like-minded people. So traders generally think, oh, Google stock has gone up for 7 straight months. Maybe it's time to sell Google stock. We're contrarian by nature. Not everyone here is, but most of us are not followers, not people who are likely to jump in on the trend. Although that's a very profitable way to trade, and there's certainly great ways to do that as a naked trader even. But the idea here is that it's so much easier to find reversals because why? Usually you can get a really tight stop, and it can end up in a huge profit. Also, when the market's been going one direction for some time, when it finally collapses, it happens rather quickly, right? Look at this reversal right here. Okay? How many candles did it take to go from this zone at 93.70 to this zone up here at 94, we'll just call it 95, okay? So it went 120 pips, and it took 20 candles, okay? It took 20 candles to go 120 pips. How many candles did it take to go down after it printed this reversal? 3. It took 3 candles, 3 4-hour candles, 12 hours to retrace 130 pips. In other words, the bend is your friend because you get a lot of pips when it bends. And you'll see that happening over and over again. When the market finally reverses, here's a downward market. Boom, boom, boom. Slowly, slowly, slowly coming down. Finally down here, it decides to reverse. Looks like we should have a zone down there. And when it finally rockets up and breaks through this level here, right here, when it finally breaks through on this candle, it took, looks like it took, in 3 candles, it covered 100 pips. In 3 candles, it covered 100 pips. And in all these candles right here, in these 17 candles, it covered basically 40 or 50 pips. 17 candles go 50 pips, 3 candles go 100. So that's the kind of thing I'm talking about. And that's why I think, even if you're not aware of that, intuitively, traders are aware of the fact that you can make a lot. You can make a lot when you take counter trend or reversal type setups. So how do we know that we've got a bend? Well, here's what we know. We get a bend on the line chart. So let's look at our current chart as an example. Let's not use hindsight bias here. Let's use the current market. Okay, so what we know here is that we've hit a level at 92 on the CAD Swiss, where the market's repeatedly reversed. However, we don't have that bend yet. And when I showed you the 1 hour chart, the reason I wanted to show you this is because we have to be thinking critically here when we're looking for a reversal. And the question we have to keep asking ourselves is, what are the other traders doing who are trading, against me? What are they thinking? What are their thoughts? So my thought is, we've reached this level, it's probably going to reverse, but what about the guys who are thinking it's not going to reverse, it's going to keep going? What are they looking at? They'd be looking at something like this. They'd be looking at this axe formation where the market's boom, 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 doing this. They're saying it's going to break out and go higher here. Now, what would be evidence to support their theory? Well, so long as this trend line holds and keeps squeezing the market up against this 92 level, then they're probably going to be right. They're going to make money when it squirts up higher tonight during the Europe or New York session. They're going to make big bucks. And if I decide to sell right now, I'm going to hit my stop. If they're right, what would make it so that I'm right? Well, I'll show you. If this line gets a really strong bend, a very sharp angle down, that would mean that it's probably going to fall away here, right? I want to see a sharp angle down, like the one we had right here. When did it become a sharp angle? It became a sharp angle on this candle right here. So once this red candle closed, we say, okay, it's a sharp angle, that's a bend. And the bend is my friend, so I want to trade that sucker. Same thing here. We don't have that yet. We do have a possible double top. So it could get up here, hit it, come back down and hit it again and double top. Excuse my alert going off for the 2E system. Sorry about that. Am I living in the fast lane? Adam, the 2E system is in the Daily Trader. You're on 35, yeah. You're not even close. Sorry, Adam. If you're on day 35, you're not there yet. Apologies, but it's true. Bob says it sounds dropping off. I know why, Bob. It's because I'm holding the cursor down on the chart. Apologies, guys. I won't do that. When I do things like this and like this, it messes up with the sound, so I won't do that. Yeah, Adam, David just had a really good point. If you're interested in the 2E system, go to Naked Forex now, and SBFat, who's Jorge's here, you can also tell him that, go through the 2E system there. It's on the forum, okay? So it's all right there for you. For me, I like it for 4 hours, really. Okay, so the bend is your trend. Very few candles touch the zone, right? Very few candles touch the zone. So we know when the few candles touch the zone, it's likely to fall away. The opposite of that is when several candles hit the zone in quick succession. It usually means you're in for a breakout. So that's when going back to this chart here, we've got 1, 2, 3, 4, 5, 6 candles. If we get another bounce up here against this level, it would only add more to the theory that this is gonna squeeze here and it's gonna pop and it's gonna go higher, right? That's what That's basically, that would be the theory on that one. Okay. Now, oh my gosh. Okay, I'm gonna take this one out, guys, because it's bugging me. I'm just gonna take it off. It's the Kiwi chart. I'm gonna move it. Take off the. Where is it? Oh, it's because it's on the 1 minute. No wonder. Okay. Okay. All right. That's gone now. Okay. So back to our CAD Swissy. Okay. So the only reason that I would say that this is going to fall away is if we get a bend here. That would be and we don't have it yet. So this is not. If we have very few candles touching the zone, and if we see a bend, we know that it's probably going to fall away. The other thing we like to see when the market touches this level is we like to see wicks. We want to see more wicks and not strong closes. So we want to see what I would like to call weak closes. That's the third thing here on the zone. Weak closes on the zone. Now, so in other words, wicky closes. Weak closes on the zone basically mean that the market is giving us wicks that tell us that the market's rejecting that level. So we do have some wicks here, don't we? We certainly have a nice close on that one. And this one's okay. And this one's actually quite good. The problem is we don't have a very few candles touching the zone. The last 3 4-hour candles have actually touched our zone. That's not good. We'd rather see 1 or 2 candles hit it and then see it move away and then maybe make another run. The very best sort of setup would be a double top, right? The best would be a double top. I'm not a big fan of triple tops. They can work, obviously, but you really want to see a strong close in your direction if you're trying a triple top. For me, that's my rule of thumb. So I want to see a few candles touch the zone. I want to see a nice bend on the line chart, and I want to see weak closes. So at the moment, this would be what I would call incomplete. We don't know what's happening here. Obviously, tonight we'll find out. If the market continues to follow this trend line, I would say it looks like it's going to be a bullish breakout. If, however, the market starts to break that trend line, and especially if on the 4-hour it gives us a nice bend on the line chart, and we might get one in 2 hours, that would be reason to sell at the low of that candle. But right now, this is not a reversal. Now, let's go to the other one. I think the Euro Kiwi was another chart that someone wanted to look at. So let's find it right here. And let's go ahead and just quickly draw in our zones on the daily. We've got one up here. We've got one here. We've got one here. Yep. Excuse me. I've got the Southeast Asia flu, I guess. All right. Okay, so here we go. Euro Kiwi daily. Now we're going to go to the 4-hour chart. All right, let's see. And there it is. Euro Kiwi. Well, we're in between zones for one thing. We're not really the only one that if we made one here, okay, and consider this one not quite as important just yet, then we would be on there and we'd say, yeah, we got a couple of nice wicky touches. The problem is the market, once it made that wicky touch right here, this nice wick here, it's not a kangaroo tail, but it's a nice wick, it didn't go higher. it started creeping and crawling lower. So that supports the theory of a breakout here. And of course, we don't have a bend either. So unless we get a sharp bend here, this would not be a reversal on the Euro Kiwi, as I see it. The other one, David says there's a brilliant kangaroo tail on the Euro Aussie. Let's take a look at that one. And I'm glad David pointed it out. Where the heck is it? Oh, is it the 4-hour, David? Or, oh yeah, there it is. Yep. Everybody probably can see what David's looking at. David's looking at the 4-hour Aussie, Euro Aussie with the kangaroo tail here. We've got some nice support and resistance levels on this chart. When you get a trending pair, it's so much easier to go on the higher time frame because it gives you more perspective, right? So we've got one here, we've got one here, we've got one here, and here. Okay. Obviously, we've got several down here. And right there, and right there. Okay, now let's take a look. So what's happening here? Yeah, David says the 4 hour, exactly. So yeah, so this looks like a great place to trade. Now, if you go back, what you're going to find, and I'm going to color this as a different color. Especially if you've watched the webinars from like FX Street and stuff, we talk a lot about this 1.30 level. And on the daily chart, historically, the 1.30 level was the low of this pair. You can see it's drawn here on the green. It's the green line there. And for the longest time, it was kangaroo tail low, double bottom low. That's a kangaroo tail. That's a whammy. That's a kangaroo tail. That's a big shadow. And then, what did it do here? It started making many touches on the level here. And it finally broke out with this big bearish candle here. And when it broke out, it came back up and retouched it, Acapulco style, right here on the on the green line. So that's why it's so critical. It came back up and touched it mid last year in May, and it did exactly what we hoped it would do, which is fall away from that. I don't know if that person's here, but somebody held this for 900 pips, which is pretty good considering it went 1,378. 900 pips is a good chunk out of that. But now we're on top of that once again. This is, and I see what you're talking about, David, but it's a little bit tricky to be where we are right now. And the reason I say that is because we've had a pretty strong run, haven't we? I mean, we've made this run from down here up to here, and we've gone 765 pips in 17 days. And we really haven't had much of a retracement. The only really consolidation area was right here. So on the 4 hour, it looks pretty good. But I would, just because this pair has been going so high, I would move to break even as soon as it hit 31.30 right here. As soon as it touched there and probably cashed out some profit, I would move it to break even. Also notice that the next candle didn't trade higher on the kangaroo tail here, which is a bad sign. In fact, I'm not even sure that you would be triggered yet. So that's something to think about. But certainly this looks like a touch to the upside. Or yeah, it looks like a reversal touch. What's going to be needed though, of course, is we're going to need that bend in the chart. So this is how I would do it. If I wanted to trade this pair, I would do this. David, and I'm assuming that David's really keen on this one. I would go like this. Buy stop at this level, 30.59. Yeah, 30.59, 30.55, 30.59. Stop loss down here at 29.54 or 29.55. 29.55. So, a little over 100 pips of risk. You're going to be looking for about 86 pips. And once it hits your 86 pip target, I would definitely move to break even because I'm concerned that this thing's, it's due for a retrace. The fact that it couldn't make even a double top up here is a bad sign. See how it hit here, came down, and it made a run up. It's like a moolah top. You know what I mean, David? On a higher time frame. Like if we're looking at the 8 hour charts, this would be a moolah top. So it's something to be concerned about. Yeah. Okay. What was the other chart that someone want to look? Isn't the daily in a downtrend, says Mike, on the CAD Swiss? Okay. Let's take a look. Yeah. Certainly is, but the CAD Swiss also gave us a daily kangaroo tail back here, and it's broken higher since then. Gave us a kangaroo tail in here. The problem, though, is this thing was a problem to me, these lows. And you can see it wicked up there, and then wicked up there again, and finally came up to where it is now. I would say that, I would say that this could run out of steam, which would give more credibility to our 4 hour move here. If we get a nice bend here, that would be good. because thinking about what you're saying, which is a great point, you know, what is our retracement here? It would be, it looks like it would be, what? 38.2% retracement at this zone right here. So assuming it doesn't go to the next zone, which happens to coincide with the 50% retracement, or the next zone, which happens to coincide with the 61.8, you know, it would be a good spot for it to retrace here. Certainly here, or even slightly better would be 50. So that's a good point, Mike. That's a great point, actually. Thanks for that. I'm trading the daily only, says Felix. Yesterday was shorting the Euro Aussie and got break even after I saw 90 pips. For today, I'm looking for the Euro New Zealand short and then New Zealand Swiss long. Can you check the daily, please? Okay, we can do that. I want to keep it in context of today's webinar, which is, you know, the reversal. So I just want to really quickly here just go over our rules for reversals. We see few candles touching the zone. We see a bend on the line chart. And we see wiki closes. The last thing that we want to do is we want to see the market make a new low or a new high. And let me show you, well, we'll use your examples, Felix. Felix was looking at the New Zealand Swissy daily. Let's go. Let's go New Zealand Swissy daily. Right here. Okay, so I'm assuming long. Yeah, if you go New Zealand Swissy long, you should definitely go Euro New Zealand short, you know, assuming the Euro and the Swissy are correlated, which they are at the moment. You know, it's essentially the same trade, isn't it? Well, it's not the same trade, but it's pretty darn close. So this is a great kangaroo tail. What would make it better is if these candles weren't in the way. In other words, I prefer to take those where there's lots of room to the left. And we don't really have any room to the left because these candles are in the way. However, on a 4 hour, it would probably look pretty good as a double, sort of a double touch, you know, like a double bottom setup. And you can see you got a big shadow here off that. So I would say that looks perfectly reasonable. What would be your target? Felix, what are you looking for as a target? Because I see some hurdles immediately on this pair. Right here at 76.84. That's only like 30 pips away. And that's where we've seen lots of bounces back here. So I would be a little bit concerned that even if this trade, you know, works and it has so far, that it would hit this level and then go boing and come back down. That would be my main concern. The best trades, folks, are going to have lots of room to go. Room to the profit target, room to the left where the trade prints, like this kangaroo tail right here. See the difference between that one and this one is, let me zoom in. It was in March. The reason why this one is so good is because there's room to the left. Also, it has some ways to go before you get to the first hurdle, which is these lows here. It's better if, you know, you have lots of clean area to the left of the chart, because that just makes it easier for targets. So I would say this, if I gave this, I would say it's like a B- trade. Let's look at the other one, which is the Swissy Kiwi, right? That was the other one. Or Kiwi, that was the one we looked at. Okay. We looked at New Zealand Swissy, and now we want to look at Euro New Zealand. Yeah. Okay. It's the same trade in reverse. The problem with this one, though, is that you have this serious resistance level here where the market was boxed up over here. And this one only really has... oh, well, that's pretty good. It's got about 120 pips to go. It hasn't even triggered yet. It hasn't traded lower. But it's got about 120 pips there. It's still not a 1-to-1 reward to risk ratio, but it is certainly looking like you know, that's probably going to fall at least down to 59.11. So that looks pretty good, Felix. Nathan wants to see the Aussie Kiwi daily. Now let's just look at these from a perspective of what we've been talking about, reversals. Are there few touches on the zone? Yes. Tick. How many touches do we have? We basically have a double top here. We have one, we have two. Boom, boom. The line chart's going to show us that. Okay? Did we get a nice bend in the chart? Absolutely. Let's zoom in so you can see this. Here is our only a few candles touched right here. Okay? One candle, two candle, and then when this candle printed, which is on the side of my chart here, that's when the bend came in. So right there we got everything. Do we have wickiness? Is there some wickiness here? Absolutely. Look at, you know what I want to do is just move this chart a little bit so that I'd like to make it so that we don't see the next candle, if you know what I mean. That's easier for me to go through this because then it's, yeah, sort of like this. Let me do it like that. Yeah, okay. So at this stage we see we've got one wick there, and then it moved away immediately, which is great. But then it moved back up. We say, oh no, maybe it's going to break out. But look at this nice wick. That's brilliant. And then we say, okay, it's printed two candles there, but it hasn't really given us a nice bend away. Now at that stage it had. So at this stage we have everything we're looking for, which is you don't have a whole lot of candles touching there. You really only had two candles touch, and then it did the bend. That to me is good, nice looking. But then guess what happens? The market shakes us out a bit here. It does go lower immediately, and then it comes back up, and it gives us another one. So that, again, another reason why we're thinking, okay, it made a lower high here. It's a nice long wick. This is probably good. As long as the market clears below this low, which is my last principle here, is the market needs to make a new low or high for the reversal. And that's what we have here. So remember, we like wicky candles. We like only a few candles touching the zone, right? And we like to see the bend on the line chart. And we like to see, boom, a new low. And so did the market make a new low? Well, obviously it did over here. If we got in on this touch, okay, that's fine. But let's say we missed out on that one. It hasn't made a new low yet. The low on this candle is 60.38. If it trades at 60.32, that's a new low to me. And so far today, it's only gone to 60.39. So it needs to make another 7 pips lower, 17 pips lower from where it is right now. And then we'd say, okay, it's made a new low and it looks like it's going to go. That sort of thing. Mike says we have a big shadow on the Aussie Swiss. Let's take a look. Yeah, this one was a bummer. It gave us like almost like a kangaroo tail looking thing here, and it did go higher, made a new high, but then it just came back down and hit the stop down here. So I was looking at 96.15 and 9700 earlier in the week, but it triggered, came back down, and just boom, that was it. So it looked like it was a nice double bottom. It looked like everything was going to work, and it just didn't. It was a loser. Now at this stage, Mike, what I would call this at this stage is I would say this is a touch and go. And what I mean by that is it's going to go lower most likely. The market broke through this level. It's come back up. I don't like I know what you're talking about. You're talking about this big candle, but that's not my favorite setup. And the reason why I say that is because the close is too far down the candle. For me to be remotely interested in this trade, I'd want to see a close, one, above this zone at 94.61, and two, near the extreme high. And I don't have either in this case. So what this looks like to me, and you'll see it on the 4-hour much better, it looks like to me that the market has broken through this level here. It's come back up to touch it, and it's going to fall away again. And that's, now I don't know that that's going to be the case, but that's kind of the look that it's giving me. And how would I know that? Well, it's obviously it's just got to make a really strong low close. A close below yesterday's low, or open. A close below yesterday's open would be ideal, because then we would have a really sharp line on the chart, and that would tell me that, yep, it's going to go lower. Exactly, more of a retest. It's below the zone. It's not on top of the zone. Exactly, David. You got it. Exactly, Ronald. Yep. So that's uh uh Epping says that there's a 4-hour kangaroo tail on the Aussie. Let's take a look. Right. Yeah. Um yeah, okay. Well, I really want to look at the daily on this one. Um yeah, it's probably going to this is if I had to guess, and this is just a guess, what's probably going to happen is it's going to retrace up to here, and then maybe next week it'll fall again or something. I don't know. I don't see this. To me, this is not a place that looks really strong from a support and resistance point of view. In other words, I can't hang my hat on this as a level, but the fact that it's gone so far, it's due for a retracement. You can see this little retracement move here didn't go anywhere. It didn't do diddly squat. So I don't really, I wouldn't be surprised if it came all the way up to 103.55. That would not shock me at all. And remember, 103.55 is where we had all these lows over here. So that's going to be some serious resistance. And if we go back, there are some highs over here in October. So, yeah, maybe you can hang your hat on that. Some lows. So I can see why it's paused here at 102.77. But to me, it's so much safer to sell this sucker than to buy it. And if it gets to 103.80 next week, I would definitely be interested in a sell. If we look at it from the daily chart, it looks like it's getting ready to fall off the cliff. I know I said this all of last year, and it didn't really do it. Last year it spent all of its time in a range, right? But so here's 2012, and here's the Aussie dollar, stuck in a box basically. We had the nice kangaroo tail down here off the fall. That was nice, of course, but it's been the last half from July to December. It was in this box basically, a couple of false breakouts. So on this chart, the real target to me is 101.70, and what I would love to see happen now that we've broken below my 103.50 level is I'd love to see the market get up there, tag that sucker on a 4-hour and print a bearish candle. So yeah, so that's what. And now let's look at our principles again. Let's use our principles on this. First of all, do we have a wiki candle? Yeah. Do we only have one? Let's just assume that we can put a zone here, okay? And on the 4-hour chart, you can make that argument. Do we have wickiness? Yep, there's a nice wick here. Do we have, is the market moving away after touching it with only a few candles? Well, not yet, but it might do that with this candle if it's a big blue one. Because we actually have 4 of the last 4 candles that touched the zone, so that's not a good sign. Ideally, again, remember, the best reversal touches are where the market just tags it and then that's it. It goes away. And those are more likely on the higher time frames. Like here's a little tag. 2 candles tag and then it falls away. Those are more prevalent on higher time frames than they are on, say, the 5-minute or something like that. So if this made a sharp bend and closed up higher, then I'd say, yep, you're good to go. But it needs to clear the high here. The high of the kangaroo tail is 102.90, so it needs to close above 102.95. It has traded at 102.95, but it hasn't closed there, and we've got an hour and a half to go, or an hour and 10 minutes to go. Ron says, can you please explain the euro? Okay. We can explain that. What do we... Okay, the euro. Well, the only things that I have here on my euro are the It's very similar to the Aussie dollar. What we have here is two things happening. We have support off the bounces off the trend line, and then we have the support resistance level, which is at 34.39. The most likely thing to me that the euro would do today is it would do exactly what we were talking about with the Aussie. It would come back up and touch 1.3440 and print a bearish candle. That would be the ideal situation for the market to come up there, retouch it, give us all the characteristics we're looking for, a nice wiki touch. We want to see a close that's very weak or down near the low of our 4-hour candle. We want to see a bend in the line chart, which will happen if the market makes a new low on the next candle. So all of that, all of the things we talked about in finding reversals is a way to do that, is a way to trade this. So on the euro, I would want to sell, and this is very similar to the Aussie, I would want to sell on a bearish candle that penetrates 1.3440. I would put my sell order below that bearish candle, my stop loss above the high. What about profit targets? Well, the obvious one would be the trend line here, and that means we're probably going to be taking profit somewhere around 32.89 or thereabouts. And the other ones would be 32.50 and 31.30. Now, many people fight this thing where they're not sure, should I take big profits or should I take quick profits? Both types of traders can make money. If you take quick profits, you can take a lot of quick profits. Even if you are risking $2 to make $1, as long as you're very good at that, you can do well. The alternative is to be not very good at not having a high win rate, but then going for huge profits. So let's say you have like a 35% win rate, but you're going for like 3.5 or 4.5, 3 or 4 to 1 on your reward to risk. That's another way to do it. So if I'm an aggressive trader and I want to, and let's say I get in on this trade with like a 22 pip stop, which would not be, that wouldn't be out of the realm of possibility. You could pull that off on this trade, okay? The euro comes up there, gives us a nice wiki candle, a bearish candle, closes down near the low. The next candle makes a new low. The stop loss goes above the bearish candle. Sell stop goes below the bearish candle, and we trade that sucker. We could end up with a candle here that, let's say the candle spans, let's say it even spans 30 pips. So we've got a 30 pip stop, okay? And if we're going for this target down there, we're going for 138 pips, which is more than 4 to 1. So for every dollar we're risking, we're making 4. What if we go for this zone down here, right? Now we're looking at almost 6 to 1. It's not, it's like 5.5 to 1. For every dollar I'm risking, I'm looking to make $50. What happens if I go for 280 pips? Well, obviously that's almost 10 to 1. I don't have to hit a lot of those, right? Especially if I move my stop loss to break even, because then some of those losers don't actually affect me as much. I don't have to hit a whole lot of those and be right often for me to make money. I just have to sit through it, right? I got to sit through it. I got to stay the course. And here's the thing that often happens. It happens to me. It happens to everyone, which is you have a trade and you think, okay, I'm going to go for the big target on this trade, okay? So I'm going to go for the big target, and then you take the trade, and then it goes in your favor, and you say, oh, cool, I'm going to make 150 pips, but it only goes, let's say it goes 90 pips, and then it reverses. And you think, oh no, it's going against me. Oh no, now it's only up 45 pips. Oh no, I better move my stop loss to break even because it might take me out. Move your stop loss to break even, it hits your break even stop, and then it falls again and it goes the 150 pips you're looking for. See, what happens with that is people will often change their strategy and go, well, last time I did that, I decided I was going to, take the big profit, and it didn't work out. So this time, instead of going for 150 pips, I'll go for 30. And then, of course, the market blasts through, hits your 30 pip target, and goes another 300. And it's just a maddening sort of cycle. So for many traders, if it's hard for you to have that, to sit with it and stick with your system over time and stick with your strategies, especially your exit strategy, what you might do is just decide to do a little bit of both. Take some profit quickly and then take some profit at the faraway target. And that can be something that you can do to basically, it's a way of psychologically tricking yourself into sticking with your system. And that's something I recommend, especially if you find yourself doing this thing where you know you go, oh well, last time it didn't go far, so this time I'll go for a quick profit. You know, trading the last trade is a really crazy. It's a mind game that will throw you into a mental institution, you know, and it's crazy. So the better thing to do is to, if you're sure that you can stick to one, either the quick profit or the really aggressive profit target, you can do that. But even better, most people are happy to do both and to split it up. You could go 50% at the 1-to-1 risk to reward ratio and another 50% at the 4-to-1. You know, that sort of thing. Because when the 4-to-1's hit, it will increase your average winner. And over time, that will really add. But it takes time for that to add. Hey, Chris, I will be sending out this link for this webinar. Yeah. Mike likes using trailing stops. That's fine too, Mike. Yeah. If you don't have an aggressive target, like for this one, to me the obvious target on this one is this area down here. Right here where all these touches are. Now, here where the market made it over the hump and then it just sort of rested and then it went up again, came back down, it gave us everything we wanted, gave us some wiki candles, only really 2 candles touched it, and then it finally gave us the bend. Right there. That's where we get the bend on the chart. So on this candle right there, we finally get the bend. And then it went up. And it actually sort of, boom, came down, retouched it, and then went up. So that was an example of all of those reversal principles we talked about today. And then over here you have the same thing where you have these wiki touches. Even though you have lots of candles that are sort of stuck here, only 2 candles touched our zone down here, and they're very wiki. So that's nice to see too. And you'll often see that where the market will rest after a move up or down. It'll rest like this and then rocket up again. And we talked about that in the last trend trading webinar. So to sum it up, as far as the euro goes, I'd love to see it get to 34.40, print a bearish candle, make a new low off that bearish candle, and then we can go for a huge target down here. And that would be right here. We can even go to the trend line, which would be 32.88. 32.88, and if we're selling, let's say we're selling off a bearish candle that's right here, that's 130 pips. And let's say that our bearish candle was a 30 pip or even a 40 pip candle. Even if it's a 40 pip candle, it's still 3-to-1. Yeah. So that's the euro. Yeah. If the euro trades above 34.80, would you take it long? I would trade the euro long. That's a good question, Carlos. I'm glad you asked it. If the euro actually traded, yeah. So basically, what you're saying is if the euro breaks above this low here, yeah. If it broke above that area, and then this is what I'd like to see: the market move up, break through, go higher, maybe get to this area. Maybe this won't all happen today. Then come back down. Let's say on Monday it starts coming down. On Monday, this would be ideal. The euro for a euro long for a buy trade. Let me delete this. The best situation for a long would be the euro would go up and up and up today for the rest of the day. Then next week, the euro's up here around 35.70. Then the euro comes down on Monday during the Asian session, and during the early European session on Monday, the euro prints a bullish candle off 34.80 on Monday, and then it rockets up on Monday during New York or Europe. Or even if it just spent all this time up here Monday and then on Tuesday it did that sort of thing. The idea is that I want to see the market trade much higher than 34.80 and then find support there. That's better. No, I'm just using the 4-hour charts because people have been asking for them. Yeah. See you later, Andy. Have a great weekend. Thanks for the question, Carlos. Are there any more questions? So I just want to go over our principles. When we're looking for reversals, what do they look like? Principles are, let's just pick a chart at random. Euro, pound, 4 hour. Let's do that. Okay. And now watch, there won't be any good examples on this one. Here's one. Well, let's just go to where we're at right now. Okay, Euro pound. So, Euro pound has the highs up here and the lows down here. It looks like to me the lows are around 85.50 and the highs are around 86.95, but we could easily make that 87 even. Did we get, on this last touch at the upside, did we get a bend? Not really. We didn't really get one here until the next candle right there. That was the bend, really. So did we get a wick? Yeah, we got a little wick there. Did we get only a few candles touching it? Yeah, just a few, and then it started to fall immediately, which is great. We got that bend. Did it make a new low off this candle right here? Sure did. And where did it go? It went to the very next zone down there. So that would be an example of a sell trade. Another buy one right here. This one has all the things we're looking for. Only 2 candles touched the zone, and then it gave us our bend right here. This is an example of a strong move in the opposite direction. That's a nice reversal right there. Now right here, we don't have a reversal because we've already broken through the level. Instead, it may even make sense to go to a 1 hour. And on the 1 hour chart, if we had a touch right here off this level, a bearish candle, kind of like the Euro US dollar, if it did the same thing on the 1 hour Euro pound, that would be a trade worth taking. Where would the targets be? Well, same sort of deal. Where are where's the support and resistance? It looks like on this chart we've got excuse me. Well, we've got some right where we're at right now, but once we go through that, 84.70. So 1 hour chart, here it is. This will be the last. There it is right there. Okay, market comes up, prints a bearish candle off these lows right here. I put a sell order below that bearish candle. My stop loss goes above the high. I could target this area right here where we've seen the bounce, which is around 85.16, but the more aggressive target for about 60 pips or so, and I probably will have about a 20 pip stop. It's probably not going to be more than a 22 pip stop. I'm going for 63 pips down here at 84.76. So that's a 3-to-1. And that's, again, assuming that I get all of those reversal signals up here. Wicky candle, bearish candle, the next candle closes lower, gives me the bend on the chart, all of those things I want to see. The great thing I've got here is I've got all this support here to work in my favor if the market does make it up to 85.50. So hopefully that helps. You're right, Adam. I'm gonna do that. You're very right about that. We will do this for the Daily Trader. Yeah. No, Josh, I don't use pivots. No. Carlos, this is gonna be the last chart, folks. We're gonna go to the Aussie yen. And thanks, Alexander. Here it is. Aussie yen. Thanks, Mark. I'm glad you like that. I'm glad that yeah, that's good to hear. Okay. The Aussie yen is, wow. Okay. This is the 4 hour I'm looking at here. Now the question is, where are we on? Is this support or is it going to bounce here or what? Do we have wicky candles? Yeah, we have a little nice wick here and a nice wick here. But really what we need to see is the market needs to move off of this level. If it doesn't move off, it's probably going to break through. We've had 4 out of the last 4 candles close on the zone. So we really need to see a sharp move up. In other words, a bullish candle close to give us that sharp bend and tell us that we're going to go higher. At the moment, though, on the 4 hour, I'm getting nothing. And remember, we've gone so far, so fast on the daily that it may actually have to do some retracement here. Here on the 1 hour is interesting. We did get a kangaroo tail and it broke higher, but now it's already come back down. That's not good to see. Kangaroo tails, I like them if the market just goes, you know. It's okay if it retraces a little bit, but it's spent the last 4 candles back down here in a bit of a drawdown. Not good to see. I don't know. I mean, there's no call on the Aussie. If the Aussie makes a sharp close upward, then yeah, then it's great. It's a great buy, obviously. And the target for me would be 96.66 or 96.90. You could wait for an aggressive target at 97.20 all the way on the other side. That's how I would trade the Aussie. Yep. Aussie yen, sorry. Yep. This could definitely be a head and shoulders. Singh is saying that, look at this. Shoulder, head, shoulder, absolutely. If that were to happen, I'd want to see it break lower, come back up, retouch, and then I'd sell up this sucker right here. So break lower, come back, boom. Sort of like we were talking about with the euro and the euro pound. Same sort of deal with this head and shoulders. Yep. Bob agrees with saying, yeah. Or is it a box, says David. Well, I mean, look at that. The only thing about the box is we only have one touch on the other side. Or you say it was a false breakout, and you go, okay, you have several touches. And it was a false breakout, yeah. Last kiss style. We could last kiss style it off at the bottom. Exactly, David. That's it. Can you show all the rules again? All right, I'm going to show you all the rules, and that will be it. That will be it for the webinar. The rules are, let's go to let's just go to the 4-hour charts because that's where our rules are. And what was the first one? We're looking at the CAD Swiss. Okay. If we're looking for reversals, we want very few candles to touch the zone, right? And I'm going to put these up on, I'm going to send you these on Facebook if you want to put them in an ebook for you. So you can get these rules. But basically, very few candles touch the zone, number 1. 2, the bend is your friend. We know that we're probably getting a reversal if we get a bend on the line chart. We want to see weak closes on the zone. In other words, we want to see wicky closes. We don't see the market close in the middle of the candle, not on the low or the high. If it closes on the low or the high, it's probably going to be a breakout. If it closes weakly and gives us wicky closes, then that's good, right? That tells us that it's going to it's probably going to reverse if it gives us some wicky closes. And then the market needs to make a new low or a new high. So when we're looking at a reversal off of a resistance like this one right here, we need to see the market make a new low after that bend. So we got the bend right there, and now we need to see the new low. Here's the bend, here's the new low, right? Here's the bend right here. Here's the bend on this chart. There's the bend. Nice wicky close. We only have 2 candles there. Is it going to make a new low? That's the question. The question is, can it break below this red candle and make a new low? The answer is, of course it can, and it did. That's the kind of thing that is indicative of a reversal. So hopefully those rules help. Yeah, Martin, each profile is just different charts. So I have 4-hour charts in one profile. So if I go to profile, I can go to my 1-hour charts, 4-hour charts, daily charts, weekly charts. They're all in one profile in MetaTrader. Yeah, exactly. Adam, I'm going to put the Facebook up today, so I'll put everything on there. I'll put the last webinar on trend trading. I'll put this webinar, and I'll put the ebooks on there for you guys too, okay? Thanks, guys. Thanks, Mike. Have a good weekend. Thanks, Adam. Thanks a lot, Stan. See you later, Singh. Bye, Carlos. Take care, guys. Thank you, Rasika. All right, Arma. Good night. Good night, Daryl. Bye, Ron. Thanks, Colin. Awesome. See you later, guys. Take care. Yes, Mohammed. It's at Walter Peters. That's my Twitter. There it is right there. See you, Frederick. Bye, guys.